The Fed is suggesting that everything is just fine. Should we start panicking? You came here for the truth, so let me unveil that for you. Today, I've got an interesting video. We're going to look first at the repo operations. I think this is really clear to me at this point that something is broken. And when you have to hear messages from the Federal Reserve telling you that everything is okay, I think that really shows how dangerous things have become. They did this the exact same way back in September of 2019. Here we are. Number two, I want to talk about the markets. This is, of course, front and center for a lot of people. They've got their 401k, they've got their RSPs, their supers, their retirement accounts are all focused on what happens today. And then we have the retail investors. This goes in with the savers as well. We'll touch on all these points. Let's begin. Here we go with the repo operations. In the previous video I had done, I showed you that they were just under 500 billion, but guess what? Congratulations to the Federal Reserve, 500 and nearly $3 billion. Over $500 billion in a reverse repo operation. This right here just shows you that there has been so much demand for this one particular part of the madness that we have seen of the Federal Reserve. I mean, they have really put their hands into every single thing. Look at all the different special purpose vehicles that were set up and all the activities they were doing. And now today we've got them at a record high level with the reverse repo operations. They have been doing repo operations previously. Now we're seeing a lot of reverse repo operations. When they are pumping money into the system and they are buying up all of this nonsense, the treasuries, the mortgage-backed securities, $120 billion a month, it creates problems in the markets, and that's why we see this today. Looking at this Derby's take, Fed is fine with reverse repos nearing $500 billion. That's right. They're fine with it. Not an issue. This is the New York Fed President John Williams telling you it's all good. I mean, why should you worry? I mean, September 2019, that was different. That was a different time. Today, I mean, clearly everything's okay. A once obscure Federal Reserve rate control facility is now holding nearly $500 billion day, $500 billion day after day, and the Fed isn't concerned. Over the recent weeks, eligible financial firms, mainly money market funds, banks, and government-sponsored entities, have been moving ever larger amounts of money into what the U.S. Central Bank calls its reverse repo facility. Other countries have this as well, but this is the big one. Everybody watches what the Federal Reserve does at any moment. They get into more details here in this Wall Street Journal article. I just want to show you the fact that this has been absolutely the most important factor for the financial system today. The entire financial system around the world is keeping their eyes on what happens in this market. They're telling you everything's okay. The banks around the world are keeping steady with everything that they're doing. But remember, they used to have the reserve ratio requirements, and then they took that away because of the whole 2020 issue. That wasn't the problem. So the banks didn't need to keep all these reserves. My goodness, a little bit of reserves for the amount they're able to loan out. But anyway, they got rid of that for a period. They put it back in. As soon as they put it back in, things like Archegos started to unfold. You saw the unwinding there. Greensill before that. So I think that possibly had something to do with it, at least to some degree, okay? A small percentage of it because of all the activities that were happening, and suddenly they need to have a little bit of capital on hand. They need to have some reserves. Oh, okay, we got to tighten up our belts a little bit, and then you got problems. And then you've got this instead. This is what's happening. Banks with binding leverage ratio constraints become less effective at facilitating credit flows and intermediating in financial markets. So as they had to bring in just a little bit of those reserves, then suddenly the banks are more constrained. They need no constraints whatsoever, no regulations, no nothing, or else the stuff can't flow, the money can't flow. This currency is in desperate need of some sort of change, and yet it just gets worse and worse and worse. So they're showing you here the total bank assets and loans and leases on the left-hand chart, and on the right hand you could see the primary dealer positions, whether that's government securities or mortgage corporates and asset-backed securities. Ultimately, these have both been coming down. I want to know back, you go back to September 2019, who was getting all of that cash? Who was really using this facility? Well, we're going to find out exactly 2 years later. That data gets published, so I am excited. Let me tell you, it's going to be all the big banks we're used to hearing, but regardless, stocks close near highs as bond yields dip. What's happening right now in the markets, let me tell you, short term, by the time you're seeing this, it might be a different story. But of course, they are waiting for the inflation numbers. Inflation numbers are going to have a determining effect on what the Federal Reserve does. Remember that not just for the day you're watching this video, but of course, into the future. Even if inflation comes out a little higher than the street expects tomorrow, the Fed isn't going to change its path. By the time you're watching this video, it's probably already today, but we'll get those numbers. I'll do a video for you, of course. There's a lot of wait and see going on, and really just thinking it would take a lot to really surprise the market. So as long as it's not something crazy, the market is going to keep status quo here. It's time for the Money GPS Insights. Number one, it's pretty clear that the markets are expecting higher levels of inflation. They're also being told that inflation is going to come down. It's only transitory. It's only temporary. That's the expectation. Number two, it's pretty important to realize that statements will be coming out in the coming days and weeks and so on that will try to calm the markets. This will come primarily from the Federal Reserve. You've got different Fed presidents, vice presidents, and so on that are always making messages, and this is done on purpose. Of course, they call it forward guidance. Whenever you see the term forward guidance used, that's what it means. They put out statements, whether that's coming from the FOMC or whether that's coming from the presidents on interviews with 60 Minutes and all these different organizations. That's there to calm the markets. Number three, investors, listen to me. Don't wait for the Fed to make their next move. We already have the facts in front of us. We already see how prices are rising, and the companies are increasing the prices of the things that you buy. So not just the raw materials, which are hiking in price, but of course the products that you have to buy. Take action today. We've got a lot of retail trading that's been going on. Retail investor activity remains strong, and online broker account trades are very elevated, just showing you that this is a time in which people truly have changed the way that they invest. And you could see right now that throughout 2020, that was the definition of buy the dip, because every retail trader suddenly became a professional, and now we can see that a lot of money moved in. And for some people, they've done really well, which is great, because you want the retail, you want the little guy to win, that's for sure. The SEC is to review market structure as meme stocks stir frenzy. They're going to focus on pricing incentives that exchanges and high-speed traders use to attract orders. Look, I don't know what's going to happen here, but all I can tell you is that generally the little guy loses out. All these high-frequency trading schemes that are going on right now are really, really profiting off of the fact that they are super fast and they can use algorithms in order to basically do things automatically. You as the individual, all you can do is basically buy and hold long because they're always going to beat you. And that's the crazy part. Public demand for bank deposits is elevated due to high precautionary savings and lack of investment options. So there's two lines on here. Money market rate is basically that lighter blue line, which shows you it's basically nothing. If you put your money in cash, you're not getting anything. And the darker blue is the savings and checkable deposits in commercial banks year-over-year growth. And of course, that's been accelerating. Some of that has to do with the fact that people just simply aren't able to spend like they would before. They aren't going to as many restaurants and the bars, and they're not going on vacation, and they're not going to do all these different things. So their cash is accumulating in their accounts and so on. I think there's much more to it than that, but that's the surface level stuff. Mortgage applications decrease in the latest MBA weekly survey. So you can see the Mortgage Bankers Association bringing out this data, and you will look for yourself, just showing you a decreased volume. And I think this has to do with a number of factors. Prices are very, very high. You've got construction costs that are also there. Remember, if somebody buys a little bit of a fixer-upper, suddenly that $20,000, $30,000 upgrade, maybe they wanted to do this, and that, is suddenly $60,000, suddenly $70,000. So it's going to take a bigger hit. So that's part of it too. So remember, there's always going to be more than one reason for this. Credit Suisse, they're talking about offering bankers bonuses to stay as defections mount. Remember our kegels, that started to unravel, and they started to get rid of people here and there. And I think this is something that people should be aware of. And the only reason I mention this is simply because you as the individual, wherever you are at, a 9-to-5 job, a business, and so on, remember, always remember that having a secondary source of income is really critical. Even if that secondary source of income is just $200 a month. That would be a life changer for a lot of people if something were to happen to their primary source of income. And last but not least, El Salvador becomes the first country to adopt Bitcoin as legal tender after passing a law. I don't know what people think about this. For me, I would approach this with a grain of salt for the time being. We'll see if they're actually going to take it up and actually use it and how that will be implemented. But I believe that this could set off a chain of events where other countries do the same. Whether that is positive or negative and so on, that's up to you to decide. But I do think that somebody had to be first, and El Salvador seems to be the one. There could be a bunch of other countries out there that do the same. So I will keep you up to date on that as well. If you want my 7 critical tips for financial education, it's a very short PDF. By the way, I've received a lot of emails, and I was sending out repeated emails over and over again to get that to people who have already signed up for the Insiders. If you're not on the Insiders already, you've got to sign up. You're going to get that PDF document, which might already be something that you're aware of. You might read through it and say, hey, I knew this stuff. But maybe you've got an uncle, maybe you've got a brother, maybe you've got somebody in your family that would actually benefit from it. It's very light. I don't talk about central banks. I don't talk about repo operations. It's just simple stuff. And then you're able to share that with other people, get them to start talking, asking questions, and so on. So you can sign up at themoneygps.com. And if you found the video informative, hit that thumbs up button. When you do, you're supporting the channel. Of course, you could share this. I'm posting stuff on Instagram and Facebook and all over the place too. So definitely share what you can. I appreciate it. And if you haven't seen this video already, you definitely want to check it out. Click it, and I'll see you there.